why most people fail at investing, even when they know what to buy. Most people believe investing is about intelligence. They think the people who make money in the market are simply smarter than everyone else, that they know secret strategies, hidden stocks, or perfect timing. But the truth is far more uncomfortable. Most people already know what they should invest in. They've heard the advice: buy strong companies, invest consistently, think long-term, stay patient. The information is everywhere, yet millions of people still fail at investing every single year. Not because they lack knowledge, but because investing is not a test of intelligence. It's a test of emotional control. And emotions are where most investors lose the game. Because when money becomes involved, logic often disappears. Fear becomes louder than reason, and that changes everything. Most investors begin with confidence. The market goes up. Their portfolio turns green. Everything feels easy. Then reality arrives. A market crash, a sudden drop. Bad news spreads online, and within days people begin panicking. They sell during fear and buy during hype, exactly backwards. This is one of the biggest reasons investors fail. Not because they picked terrible investments, but because they couldn't control themselves during uncertainty. The market rewards patience, but human psychology is built for survival, not investing. When prices fall, the brain reacts as if danger is everywhere. People stop thinking long-term. They only want the pain to stop, so they exit the market at the worst possible moment. And later, when prices recover, they return too late. Again and again. Fear destroys more wealth than bad investing ever could. The modern investing world has become obsessed with speed. Everyone wants instant success. Social media constantly pushes the same message: double your money quickly. Become rich overnight. Find the next explosive opportunity. And slowly, investing turns into gambling. People jump from trend to trend. Meme stocks, viral crypto coins, risky leverage, unrealistic promises. The problem is not ambition. Ambition is powerful. The problem is impatience, because real wealth rarely looks exciting in the beginning. Real investing is repetitive, slow, consistent, and honestly, sometimes boring. But boring systems are often the systems that build the most wealth over time. Most people fail because they abandon consistency in search of excitement. They quit before compounding has time to work, and compounding only rewards people who stay long enough. Another major reason investors fail is simple. They invest without a plan. No structure, no strategy, no understanding of risk. They buy based on headlines, opinions, and emotions instead of systems. Successful investors think differently. Before they invest money, they already know how much they can afford to risk, how long they plan to invest, and what they will do if the market crashes. Because crashes are normal. Volatility is normal. Fear is normal. The market has always moved in cycles, but people without structure panic during every downturn because they never prepared mentally for it. Investing without a system is like driving through a storm without headlights. You may survive for a while, but eventually, confusion takes over. Structure creates stability, and stability creates long-term survival. Most people spend years trying to predict the perfect moment to invest. They wait for the perfect price, the perfect timing, the perfect market condition. But history shows something powerful. Time in the market beats timing the market. The investors who consistently win are rarely the smartest people in the room. They're usually the most patient. Because markets rise and fall constantly. Crashes happen. Fear spreads. Headlines create panic. But over long periods of time, disciplined investors continue moving forward, while emotional investors keep restarting from zero. Patience is not weakness in investing. Patience is the advantage. The market rewards people who can stay calm while everyone else reacts emotionally. And that ability becomes more valuable than prediction itself. The biggest enemy in investing is not inflation, not recessions, not even market crashes. It is human behavior. Because knowing what to buy is easy. Holding it during uncertainty is hard. The people who build wealth are not the people chasing excitement. They are the people who stay consistent while everyone else reacts emotionally. In the end, investing is not about predicting the future. It is about building discipline strong enough to survive it. And once you understand that, you stop acting like a trader chasing quick wins and start thinking like an investor building a future. Because real wealth is rarely created in moments of excitement. It is created quietly through patience, consistency, and time. I'm Let's Make Dollar. And this is why most people fail at investing, even when they know exactly what to buy. See you in the next one.